sometimes being the person that was in charge of looking at the risk, you didn't make as many aggressive decisions.
Sure.
And I think there were times where we could have been not to be foolhardy, but to take opportunities and a little more aggressive.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Gerry Neugent here on the show. Gerry, welcome.
Thank you.
I'm excited you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Okay. I'm Gerry Neugent, technically co-chair of Knapp Properties and manager of William C. Knapp LC. Originally, I was from Milwaukee, and I came to Des Moines to go to Drake Law School. So I finished Drake Law School in 1975. My plan originally was to go back to Milwaukee. My wife's from the Chicago area. We were thinking we'd go back. I just started working here, and it's been a great decision we made, partly by default. So I practiced law from 1975 through 93, first with Bill Weimer. It was a firm called Weimer Hudson. Well, at the end, Weimer Hudson, Flynn and Neugent. Then I moved to the Bellin law firm for a number of years. And during that, I practiced primarily in the area of real estate development, transactions, and the like, zoning, that kind of thing. And one of our clients was Iowa Realty and Bill Knapp. Bill Knapp, too, actually practiced law with me for a while. And then he went out to be early, like 1978 or so. He went out to be general counsel at Iowa Realty, but I was doing a lot of the outside legal work. So I had a good relationship with the Knapps. And when Bill sold the brokerage company to Ameris, Central Life back then, he moved all of his assets and properties into a company called Knapp Properties for the management of it. And they were looking for a leader of that. And so in 93, they talked me into coming out. So I came out as president of Knapp Properties. Been there since October of 93. So it's been a long run. It's been a great deal to work with Bill and people. And Des Moines is an incredible community. We used to talk about, when I practiced law, the real estate bar. The lawyers are very good to work with each other. Everybody worked together. Sure. You could trust people. You wouldn't have to always be on guard that someone's going to pull a fast one on you.
It seems to me like real estate is maybe slightly unique in that regard. Yeah. There aren't all the facets of law that way, in the sense that everybody's trying to get something done.
Right.
Trying to get accomplished in certain aspects of law where it's heavily, it's complete opposition.
Exactly. Right. Exactly. Very contentious. Yeah. But it's generally true. And sometimes you deal with lawyers from out of state, and you just really have to be careful because they might, change something that we weren't talking about and the like. But the practice of law, especially in the real estate area of Des Moines, was a very, very good experience and positive.
Why Drake?
Well, this is a long story. When I was in college, I went to Marquette undergraduate out in Milwaukee, and my parents lived in Wisconsin. When my dad moved here and was president of Blue Cross. Okay. And so when I graduated, I was thinking, doing something. And he said, well, why don't you come to Drake? I was going to law school, and why don't you come to Drake? Because he had just moved here 3 or 4 years before. So that's the reason I chose Drake.
Okay. Yeah.
Yeah. So, and that is a very positive experience. And, good.
Going through the legal world and on the real estate side, I guess, how did that really prepare you for the role at Knapp Properties? Yes, I mean, you can dot the I's and cross the T's, but I suspect that Knapp Properties, you filled a leadership role.
Yes. Well, it is. And, the one thing I really remember is practicing law, I would say to my client, here's the risks, but you make the decision.
Sure.
It's not perfect. Title might not be perfect. And so that was the biggest difference coming, because all of a sudden, I knew what the risks might be, but I had to make the decision with Bill there and guidance. But yeah, so it is different. I think the transition was easier, especially from the real estate development side, that I had good relationships with the city councils in the county and the planning and zoning commissions and the like. So it made it pretty seamless in that regard. But it is a big difference from just advising and pointing out risks to having to make the decision.
Yeah.
So
you've got to live with that outcome.
Yeah, exactly.
93, you show up to Knapp Properties, quote unquote. What'd you step into at that time?
Well, interestingly enough, we had like 750 employees at the time because we owned hotels, Savory and some other hotels. We owned and managed restaurants like the diners, the Drake Diners. And a number of years later, we made the decision to get rid of anything with a cash register, which our employment numbers dropped, to a very manageable focus deal. So that the hotels were new to me. We had obviously managers and stuff. And so that was a learning curve for me dealing with those types of.
No, it's not just a piece of real estate.
No, it's not.
Right.
It's the business, and it's hospitality business is, was foreign to me. We learned, but it was to me a great day when we got rid of the hotels.
Yes, I can believe that.
And, but other than that, we were working on, a lot of acquisitions back then at partnerships that we managed. And so it was really a full plate and a wide variety of real estate.
Is there a project or two from the 90s that call that first decade you were there that really sticks out in your mind?
Well, that's an interesting question. Right in the 90s, we had, transactions to dispose of the hospitality properties were big transactions. We were generally in the acquisition mode by the mid 90s, 95 to 2000 for sure. Mortgages were fairly stable. I would step back, when I first started practicing, in the late 70s and early 80s, when interest rates went crazy, which was good for lawyers because there were no simple deals. Two people just agreed, they went to the bank and the mortgage closed. But, every deal was hard, so they used lawyers more. But, and that was really quite a learning experience in the 80s with the interest rates and how to make stuff. And I had, interestingly, I represented and incorporated Dan Ruprecht when he first started the R&R business. Dan was an incredibly smart developer. I learned from him about pricing, but also about debt, the risk of term, the risk of rate, the risk of liquidity, which served me well. It was a tough time in the early 80s with the 20% prime.
You probably saw it all. Everybody from good people in under significant duress, I suspect. And then on the other side of it, tremendous opportunities for those to execute on.
Exactly. Coming out of it was, I think, a lot of people, when they got comfortable again, did well. I had a client that, which was not unusual, but he was a developer and he developed a plat and, he had a line of credit for the infrastructure, and it was like $1 million. And as the interest rates went up, the value of the saleability and the value of the lots to the point where no one would buy a lot because you couldn't afford it. And the line of credit was 22%, and on $1 million, that's $220,000 a year just to keep property that wasn't worth saleable. And so it was a really, and so there are a lot of people in the business today that didn't go through that.
That's right.
Which is a blessing and a curse, I guess. So far, we've always been thinking rates are going to go back up, but they haven't. But you do get a little bit conservative. Like I mentioned, the rate risk, even when it's at 3% and moves to 5 or 6, it's good to try and, be cognizant of those rate risks on short-term loans and stuff.
Yeah. To your point, we've experienced the longest bull run in real estate history. And so there is a tremendous amount of the workforce, both mom and pops investors, if you will, but even professional people that just haven't You know, they weren't in the business in the last cycle, and
Right.
they just know one way that chart going up
Yeah.
to the right.
That's right. And then we had, in 2008 with the housing bubble, that was scary, in the sense, it turns out when you hit these rough patches, if you're well positioned as far as debt service, if you're well positioned, with term of your debt and not being overly leveraged, it's just really a delay more than a loss, and other than the loss of opportunity during that period. So we have to keep that in mind. And our company philosophy, really Bill's, was really to have low leverage, and for assets that didn't produce income, maybe farms, he would try and not have any debt on it, which gives you the staying power to get through these kind of rough patches.
The idea being, am I hearing right? The idea on the land that it's not developable, meaning it's not going into development production, in the near future,
right?
To where conceivably you're turning that into now to receive cash,
right? There's obviously the need for short-term debt, maybe if you're putting it in the streets and the infrastructure, which is a lot pricier now than it used to be, as we all know.
Correct. But on the land bank side, if you will, for future, it's not to utilize leverage.
Right. So, and that has served us well over the years,
right?
But there are times, as we've become a more mature company and a mature holdings, we are pretty conservative. So we don't take a lot of flyers that could be profitable, very profitable.
I think from the outside perspective, development, if you picked all the things to do in real estate development, probably the riskiest, up there at the riskiest level. You've executed on that time and time again with tremendous success. How? What's kind of some of that secret sauce to be able to have that, to be able to do it over a period of decades?
Well, I think like we were talking earlier, Bill, just his passion was real estate. Buying real estate, in the path of development, even with a 20-year horizon or more. And we didn't know we were going to move so far west in such a hurry here in the last, 10 years or so. And so it's having the land and not being in a hurry to, try and make the market, but to react to the market has been very advantageous for us. We've been able to get out. And if you own a lot of land, and if you do development, cities will talk to you about saying, we're thinking of bringing sewer out that way. If we bring it, will you be developing, and examples like that.
Sure.
So that's really been the key, to us, is just being patient.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit LegacyImpactInvestors.com to apply.
I asked you the question before we came on. I want to ask it again because I think it's important. Des Moines has changed tremendously since you showed up here at 75, right? Talk to me about what you've seen and maybe some of the expectations as you ran the business, and then what we're seeing now from a population growth. It seems to me like Des Moines is now really coming into its own and, the fastest growing city in the Midwest.
Yeah. As we were talking, there are certain psychological hurdles. And I would say, because we developed the property, Napa Valley Estates, which is pretty far out, Boonville. And it was successful in the sense that it would sell a few lots every year. It was a big piece of property. And then when Glen Oaks developed on the east side of the interstate, boom, all of the lots in Napa Valley went. And I think it was because all of a sudden I-35 wasn't a barrier anymore. People were moving out there. I had the good fortune to work with Gary Kirk and that group on as an attorney for the development of Glen Oak, which was quite a project. And I think to your question about the 90s, that probably was one of the bigger projects in the early 90s that I worked on, not for Realty or Bill Knapp. But it has been this Western growth. I don't believe I would have been able to predict this. The Grand Prairie Parkway, which goes all the way from, Hickman Road all the way down to Pat. It goes under the interstate and
You're right.
goes all the way now to Highway 5, Veterans Parkway.
Veterans Parkway. You're right.
Because it's connected. It's a huge loop.
That's a bridge.
Right. And the bridge
right
over the river.
Yes.
And of course, the extension of Veterans Parkway for the data centers.
Right. It's any comments or thoughts relative to that corridor, the Veterans Parkway section, every part that's on the other side of the river?
Mm-hmm.
West Des Moines, their growth is really down through that whole section. It's really that southwest side.
Right. Madison.
In Madison County. Yeah, we've talked about that. You indicated one of the only cities, not the only city in Iowa that is in 4 counties.
Right.
What do you think? What do you think that looks like over a period of time? Because there's a tremendous amount of ground still.
Right.
There's a lot of runway.
There is a lot of runway.
Yeah.
And, West Des Moines has always done a very good job in using like the TIF and the tax abatements, but the TIFs for like these big data centers or with Jordan Creek, they and then with Wells Fargo, they put in the infrastructure ahead of the need or really timely with the need. And they did that with Veterans Parkway, cross the interstate and go west all the way to Grand Prairie Parkway. It allowed Microsoft to continue to expand. And you can argue about the importance of these data centers, but from a tax base, it's incredible. And one of the reasons that I believe that went into the thought process for their newer is they wanted to be able to loop with roadways all of their data centers. So from going from the Veterans Parkway all the way out, and then back up to the original ones, back north off of Raccoon River Drive. I mean, it's really, the infrastructure in West Des Moines has been a great propellant for their development. But you're exactly right. There's a huge amount of land there. Madison County's excited about it. They bought a site for a future school way up. We sold it to them. They've been, at the announcement of the extension, they're very excited about all the acres that are available. Yeah. Cummings benefiting.
Almost everybody, right? Tremendous number of benefactors.
Unbelievable.
Up what's taking place there.
Yeah, it's unbelievable. And this is an interesting story, again, about one of the bigger things that happened in the 90s was the Jordan Creek development. And we sold the majority of the land for the Wells Fargo there. So we had some big holdings. And they put in the roads, we'd laugh. You could land a 747 on them. They're so big. But man, it handles the traffic. And by doing that, Wells Fargo agreed to put in their, office. And one of the things in the agreement with it was they wanted a certain level of traffic condition, a certain grade of traffic. And they built the roads and they've satisfied that. And it attracted them. Now it's attract Athene and, IMT, the others. It's a great example of how the infrastructure sets you up to have a future development.
You're completely right. One of the things that I suspect has largely changed, and probably continues to do so, is that, downtown, the central business district, I suspect in the 90s, that was like it. It's the hub.
Yeah.
And today, you look out west, every place you just referenced, the tremendous amount of players are situated out west.
Right.
I would think that aids in the continued westward or southwestward growth, because to get there is 10 minutes from work. You're really measuring what's my distance to work, the kids to school, however that lifestyle is. And if you're not downtown, you can be a lot further out in any given direction.
Companies are going to locate where their leaders live.
Right.
Whether it's out west or Ankeny, which is just
tremendous,
incredible. We have not, if I had a regret, I'd say for not taking, bigger positions in Ankeny. We've done a little bit, but it's a really incredible growth area.
Didn't see that coming.
Well, we probably did. We were partners with Denny Elwell on some stuff over the years, but it was kind of their territory. And then with Denny Elwell, just incredible.
Right.
Yeah.
Yeah.
Who would have thought?
It has changed dramatically. Going back to one of the things you said earlier, that's a city that appears, and it's getting there, but appears to still have that mental barrier of we don't cross the interstate.
Yeah.
Right?
Yeah. It might be the other way too now for their residents crossing down, but
Sure.
they still, though, they've done such a great job with the services that they provide, their, the amenities.
Yeah.
And then like having the two big developers, Danielle
Right.
and
Yeah.
Abba,
Yeah.
it's just been really good.
We've got Costco now on the other side of the
Yeah.
interstate.
Oh, yeah.
And then I think there's if I remember correctly, there's another high school that is slated to come.
Right.
I call it the other side, the east side of the interstate.
Yeah.
Which that'll spur and change things.
Yeah, it's really that Costco and the big development Denny's doing, Alba's doing is really going to jump the interstate there.
Yeah.
And then there's nothing stopping it.
You're correct. There's a lot of space there.
If you're a house flipper, execute the BRRRR strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
You mentioned Ankeny. I want to go back. Not really regret, but are there any regrets? Is there something you wish you did? Is there an opportunity that was you would have handled or seized it differently, or something that you're going, we should have put the brakes on when we put the gas on?
I think coming out of 2008 after the housing bubble, there were some good opportunities, and I've kind of regretted not maybe starting a construction company. I think we would have been in a good position to do it. We just never pulled the trigger. That'd be one. There were some other opportunities that we, coming out of 2008, I wish we had taken advantage of.
The idea being that as a result of what transpired, there were fewer players in the marketplace, and you guys were in a position to, you're here.
Yeah.
You're steady. You could have chosen whatever battle you wanted to choose.
Yeah, there were some great opportunities, and we had some we took advantage, but we probably could have done quite a bit more.
Yeah. Going into 2008, is there any sign? Did you take any action, or was there writing on the wall relative to what was forthcoming?
Now I think I knew it, but
hindsight is not always. It's always.
Yeah, that's exactly right. It was, the housing bubble was more national. The problem, that where they were, they have these guys that were doing, the big investment bankers say, well, 1920, their defaults on mortgages were this. Even in the Great Depression, people don't default on their mortgage. Well, when they started loaning the way they loaned, that changed. But here in Des Moines, it was not, I don't think, the issue. The result was very devastating for some of the players here in town.
Right.
But again, it really just set everything on hold for a year and a half or two, and everybody right back at it. The banks were never going to forget about it. Well, they did. They're back.
Right. What about going into 2022 until, roughly 2022? Interest rates have been, like historical lows for extended periods of time. Mm-hmm. And I think everybody, no matter where you were, but everybody would agree that they have to go up sooner or later. And I think just none of us knew when it was going to go up or how fast it was going to go up.
That's exactly right. It jumped high. We were always worried that it wasn't going to last forever, but it has. I mean, I think, like for the first time in a lot of years, our values, went down 3% in the state, according to the studies. Well, I think that's just that little bit of a reset is because all of a sudden the mortgage loan on a product that you're relying on for inflation doubled. So I think that's just resetting.
Sure.
It's going to be going up again soon. So it's a new world. We underwrite things differently now,
Is there anything that you did at the business, inside the business, as a result of looking forward to go, sooner or later rates are going to change? Do you extend the duration of those fixed terms? What did that look like?
We
had a planning perspective.
We were able to really extend the terms. And, banks that traditionally wouldn't go more than 5 or 7 years we even got some 15-year fixed money. And we did a wholesale refinancing. So we're still in good shape now, but it's the new projects that we have to put a little finer point on the pencil. But we were able to do that. And the CFO at Knapp Properties did a fabulous job, marshaling the lenders. So
historically, as you said, loans were done on 5-year, right? You might have a 5-year balloon, whatever the AM is, 15, 20, 25. There's a tremendous amount of debt that continues to come and reset every
right.
year, probably will through, I don't know, 27, somewhere about that range. Thoughts, fears, concerns, think there's opportunity out there as somebody rolls off that 3 or 4 fixed rate debt and is coming back on at today's prevailing rate, 7 plus or minus.
Yeah, and I think if they were pretty high projects that were fairly highly leveraged, I think there may be some opportunities there because of the loans resetting. And you're exactly right. The 5-year loans will come due here in the next 2 years. And the other thing is, is the apartment projects, the way they've sold, especially in Des Moines, the prices they get. And a lot of it's based on pro formas and increasing rents, but they all have this tax abatement that's coming off, and it's going to be a big change. So I have some feeling that values may settle and may actually retrench a little bit on the apartments when the abatements go, because our rents are going up in Des Moines, which they have to with the cost, but it's not keeping up with what our tax rates are.
No, what the tax rates are, then if given whatever your debt position is to get that thing to pencil.
Yeah. So if you have to refinance with current rates and you start to come off the tax abatements, it can be 20, 30% more of your revenue, maybe 40%.
Right. Over the course of your career, what was the single biggest change or a couple of the largest changes that you saw from 93 all the way through today?
Oh boy, that's a good question. I would say that the speed of development and the sophistication of the cities and counties have really improved. I mean, they can do infrastructure projects faster. They can allow development to go faster. So I'd say it's the speed of development that really has changed and helped. And I think the lenders, used to be, when I first started, we had Wells Fargo, back then was Norwest, but some bigger banks, but generally speaking, majority, we didn't have a lot of money center banks. So we had community banks, and they were not as sophisticated. I think the lenders here, community lenders, community bankers, are more sophisticated, more creative than they used to be.
Is that a result, do you think, of the industry as a whole just becoming more professionalized?
I think so. And I think that there's been a lot of growth in the Des Moines community banks for sure, so that they're playing at a higher level.
What keeps you up at night?
Well, I think the change in the office market still gives us some pause, although so far we've been able to stay fairly stable, but that's a concern. But I feel pretty confident about interest rates not going higher. I feel good that we have pretty stable home building and multifamily markets. The industrial, I'm not sure how much more. Industrial will continue to be as buoyant as it's been. So I don't know. I'm not pretty content where we are as far as that. We'd like to, we're always looking for more land.
Is there an asset class that you, outside of hotel, never entered, but is there an asset class you just never participated in?
I would say industrial. Over the years, way back when I was built a lot of warehouses out in Urbandale and with some partners. We then didn't do as much, but we've done several warehouses now, but not in a big a way as some of the big warehouse people. But and we do a lot of retail. We like multifamily. I'd say there's no class that we'd want to be in that we're not.
Always more land. You're looking at the next 20 years?
Yeah, we need to focus on that. We've had a lot of big sales with data center, different large sales, and it's good to fill the pipeline up again.
What's that ongoing plan? You're less involved to the extent of at some point no involvement on the day-to-day operations of Knapp Properties. What does that look like ongoing as things transition for you and the Knapp family to the next generation?
Well, there's the plan is that the Knapp, William C. Knapp LC owner land will go on for hopefully generations. Knapp Properties, Chris Costa has succeeded me as CEO and has just done an incredible job. And so we're now working on his succession plan, to see who's next up. So we believe the continuity is in place to continue. So, the trustees of the Knapp Trust will change and evolve and generationally, but Knapp Properties is well positioned to continue. So,
what do you want your legacy to be? Or what will it be?
Well, I don't know. That's hard to say. I would hope to, this is kind of trite, but I'd hope to look back and say, the place is a little bit better, the city or the community a little bit better because I was here. I mean, we have a strong, personal commitment to giving back to the community. We have that culture, the Knapp Properties and Knapp organization. Bill was always a strong philanthropist. So I would say, I hope that people remember that we had a lot of integrity and that we were true to our word and that we helped make the place better. Our goal, anyway.
Gerry, ready for the final 3 questions?
Okay.
All right. If you had one piece of advice for your 20-year-old self, what would it be?
Buy more land, buy more farmland, buy more land. I think that, and this goes back to what I was saying when I was a lawyer, as a lawyer would assess the risks, what's the risk on the title, what's the risk on the lending and stuff. And then the owner has to make the decision. And sometimes being the person that was in charge of looking at the risk, you didn't make as many aggressive decisions. Sure. And I think there were times where we could have been, not to be foolhardy, but to take opportunities and a little more aggressive. That would be my advice.
2 books that changed your life.
Ooh, 2 books that changed my life. That's a hard question. I love autobiographies, like the autobiographies of like Lincoln, and I love the Team of Rivals. That I would say that is an interesting dynamic it was in government, but in dealing with people that are not just sycophants, but people that are in charge. I'd say that. And I have to say, I just read the autobiography that Walter Isaacson did of Elon Musk. And I'm not a huge, but it's the most incredible brain ever here described.
I read the one he did of Steve Jobs, but I've not read the.
Yeah, he's a good writer.
Yeah, he's very good.
Yeah, Elon, and it kind of just stopped. So there's a lot more chapters being written.
Yep, you're correct.
But it's an incredible brain he has, and fearless and going into areas.
Yes.
It's amazing.
You're cast away on an island for a year. You can only get 3 pieces of data about your business each and every month.
Okay.
What 3 things must you know about your business to know how it's operating?
Well, I would say, obviously, cash position, our cash position, our revenues. And I would say also probably the vacancy and the, scheduled vacancies. Those would be the 3.
Yep. Gerry, this has been a fantastic conversation. A wealth of knowledge and history. Because of your work over the years, you have not only improved the city, but you've certainly shaped it to make it the way you want it. So your fingerprints are all over it. All of us are indebted for the work you've done at Knapp Properties over the year. It's been great.
Well, thank you very much. I appreciate the opportunity to come in.
No, I appreciate you being here. I'm going to give you the last word, if you've got one. Just
like I say, Des Moines has been a wonderful place to work, have your family, and also the people we work with and against are honorable and a lot of integrity, and I hope we are perceived the same way.
Yeah, no, that's fantastic. I'll put a link down below in the show notes to Knapp Properties. That's where you can find more information out about Knapp Properties.
Perfect. Thank you.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to legacy-iowa.com. impactinvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in